Okay, so let's begin. What I want to do before the market starts, the official open, is go through some of these questions that have come up. And I know that there's some people in this room right now that you're just getting started, and so you might not behind, just haven't reviewed as much of the material as others have. And so there's a lot of the same questions, and so I want to cover those because as you guys have already heard me say many times, and you're going to hear me say it again, I'm going to, if I do one thing consistently, it's going to be to attempt to drill into your psyches the simplicity of this thing we call the box. And so let's just really quickly review, and then what I'll do is I'll cover these questions that you guys have asked. Okay, so what the box does is it basically what's happening here. This indicator was built or designed to analyze the market for us. When I say us, initially I mean myself, and I have a silent partner in this whole process, and to be as close to automation as possible. And so with that said, what the box does is it identifies a high probability opportunity. And so basically what's happening is the activity that the box was designed to detect or measure is, and I really don't want to go into that at this point. Perhaps we can go that another day. But there's actually quite a bit going on. As simple as the box is and looks, it's actually quite complex. It took a long time to get it to the point to where it works the way it does. So with that said, there's been a lot of questions about, can this be automated, and some other things with the programming. So we are pushing the limit that NinjaTrader allows for in programming. And so anytime so for example, one of the questions that has been asked quite a bit is, this was yesterday that I'm pointing out. Okay, so you guys should see my screen. If you do not see my screen, let me know. Okay, so you see this blue arrow we got yesterday. So there's a lot of questions that have come through about, obviously a sound goes off when a new box forms, and there's been a lot of questions, can we get a sound when the arrows form outside the box? Every time we tried to do that, it crashed the system. We tried multiple different ways to try to attempt to have that happen, and it didn't work. So like I said, we're really pushing the limits on this, on the programming with the box. So with that said, the same with automation. We, first of all, obviously the code is protected, but with that aside, anytime we tried to add or modify code, it corrupts it. And so it's really a restriction on Ninja's part. Not to put it on them, but it's just what we have to work with. Okay, so that's the answer to that. There's not much about what we can do about the sound. It's hard coded in there. If you don't like it, I apologize, but fortunately, it's hopefully it'll become a pleasing sound because of what it does. Okay, so what I'm going to do is go over some of these other questions that have typed in here. So there's quite a few, so bear with me. So yes, once again, what we're going to do in these two sessions, so today and Thursday, and then each day I'm going to do a recording like I sent you last night, and I'm going to walk through the market with you. And what I'm hoping for in this next hour, we get at least a couple box trades that I can walk you through in real time. So a lot of people, is this live? Yes, this is right now. Let's see. So Mountain Time right now, it's 7:24. Yeah, 7:24 in the morning. So you can check your clocks and you can see that we are live. This is not a recording, unless of course you're watching this after the fact. Okay, so cover the automation question. Okay, so yeah, we're going to cover the ES this whole week. The principles apply on virtually any market. Yes, there are some differences as far as movement, volume, etc., but the concept should be the same. Okay, so there's been a few questions about money management as far as specifically how much to take off. So this is pretty much our approach to trading, our mindset. When we get into the market, we're not looking to, make $1 million in a day. We're not looking to be a hero. What we're attempting to do is to make money. And so what we want to do is do that the easiest way possible. And, fortunately, this tool gives us some pretty high win ratios, as you guys have already discovered. We've had this trade form since we've logged on today, and it's already, nailed our first profit target. So there are a handful of box traders that what they will do is they'll pull everything out at the first level. That's, I guess you would more phrase that as a scalping type strategy. Just getting in, taking some profits, and getting out. I think all of you know this, but I just want to reiterate, these markets, especially the minis, these markets we're competing with computers. There's a lot of high frequency trading programs running all the time. I know that because I used to be partners with a high frequency trading firm, and I did a lot of work with that. That's a whole nother topic. And there's a lot of institutional money that's being pumped into these markets. And these programs, at least the ones that I worked with, they don't go in there and go for 10 points. We're talking about 1 to 3 ticks, but we're talking about high volume and a very high, quote unquote, high frequency of trading. And so we always have to keep that in mind, that there's a lot of what I would call control in these markets. And so the objective needs to be to make money. And so how do we do that? Well, what we do, at least the way that in my opinion, is we put probability on our side. And so all that means is that when you're looking at a strategy, whether, there's been some comments in here of some pretty high dollars that some of you trade. So whether you manage a large amount of money or whether you're just a recreational trader, which is how I started, I'm just a normal guy. I'm just like any one of you. I, fell in love with this thing called trading back in the year 2000. It became a hobby that turned into an obsession, and I just can't get enough of it. So it doesn't matter whether you're trading, large amounts of money, whether you manage a portfolio, whether you're just a recreational trader, the objective should be to make money. And so my mindset, at least, is that the best way to do that is to trade in probabilities. And all that means, well, it means a couple things. So, I love numbers. I love running, statistics. I love, anything that has to do with that kind of thing. And so in trading in probabilities, it's very simple. What it means is that, first of all, you realize that every situation is unique, meaning that, so think of it this way. Here's kind of a random analogy, but if you step into a river, it's the same river, but the water's different. So in other words, every single time you step in it, you're actually, in a real way, stepping into a different river because of what's contained in the water. Maybe one of the times you stepped in it, it was cold. Maybe the other time you stepped in it, it was warm. Maybe another time you stepped in it, it was polluted. Somebody dumped something upstream. So knowing that and understanding that, because in the market, we can have a program go off and execute, 15,000 orders, which can happen, under what would appear to be the same conditions that have existed before, but it's completely different. And so that's number one, at least. And again, guys, this is my opinion, and it tends to work quite well. So coming with that mindset, knowing that every situation is unique, what that tells me is that, just because we have a red arrow doesn't mean that this is going to work, but also doesn't mean that it's not going to work. So probability means that, if we look back in, historically, we can see that, okay, this one, boom, that one went, nailed it to the tick, but that one, would have got, at least some profit out of that. This one, obviously, that one. This one, that's a loser. I would have lost that one. I didn't trade that one, but I would have lost that one. This one, pushing towards the end of the day, this one's a winner. It goes, hypothetically, if you held this, we prefer to place a protective stop 1 tick below the box. So as soon as we're in, I'm protecting my capital. I don't want to risk too much. And so this thing got 1 tick away. And this, yeah, granted it was overnight, but that's more or less besides the point. Okay, so that's a winner. This one we saw live happen. This one nailed our first target. That one won. For example, so 1, 2, 3, 4, and then the fifth one was a loser. So we know that, okay, 4 out of 5 trades in this grouping won. Okay, why is that important? It's important because if you're trading in probabilities, it's important to know what you're getting into. It's important to, to look at your strategy. In this case, obviously the box. And so if I know that on any given set of 10 trades that I take, or what somebody I know would call a sample size, and if I know that overall I'm going to win 70% of them, so I'm going to win 7 out of 10 of them, I'm going to take it regardless of market conditions. And I say regardless of market conditions because, again, going back to every situation is unique. We don't know that right now this thing won't slam back down, 12 points. We also don't know that it's going to, rally to the moon 12 points. All I can do is react to the current market conditions right now. And so that's it. No complication, just raw statistics, as I like to refer it to. Okay, so I know that, 7 out of 10 of these trades that I take, or maybe in some cases more, I'm going to win 7 of them. And so I don't care about, an announcement. I don't care about, what Bernanke's saying or not saying. I know the statistics. I know the probability, and the probability is very high. And so like a robot, okay, I see a box. The parameters are the same every single time, and that's it. The execution takes place. Okay, so let's go to, and so there's a question here about historical statistics regarding some specific setup together with the box signal that could enhance it. That gets really technical. If you've been trading for a while and this is what you do, obviously you can do whatever you want. If you want to combine something, and we have traders that do that. They have their own style of trading that they've been doing for 15 years. Some people for as long as I've been alive, and they combine the box with that in whatever way. And by the way, real time right now, we're at one of those RTM trades. So this is one where, if we're, still looking for a potential downside, then, we might take that. At this point, let's see, what time is it? So the market's been open for a few minutes already. So it's something that, we look at. I don't always take those. I can get into that a little bit later, but let me cover these questions real quick. And by the way, as soon as the box forms, if we have one, I'm going to stop talking about whatever we're talking about, and I'm going to walk you through a live box trade if we have one form. I'm hoping we have at least 2, so we'll see. Okay, so let me come back to that question. Okay, let's see, where was it? Lots of questions here. This is good. I'm glad you guys are asking questions. Okay, yeah, so back to the, using something in conjunction with the box. And you can do whatever you'd like to do. What I want to show you and, help you try to understand is just the simplicity of the basic parameters of this. Because, I showed you guys an email. Well, I don't know if you guys watched it. If you have not watched the rebroadcast, I had to re-record that webinar because the file, it stopped recording halfway through. It's really frustrating. But anyways, I re-recorded it. I covered the same things that I did last Thursday. And what I added to it was an email I got the day before from a trader who, he was one of our first guys as part of our beta group. And, he normal guy, just, your everyday guy. And, he's been doing no less than 50 points a month, on the ES, and I would say he's, being very conservative about it, and he makes some really good money trading the box, and he does nothing different than what I've explained. A box forms, he's in, he takes profit, and there's not much more to it than that. The important thing, again, that I want to drill in is just not to overcomplicate it, because we don't need other things. If you want other things, that's fine. You can do what you want. But what I want to do is explain to you the simplicity of the box and how to do it. I've got some other charts up. So, okay. Okay. So there's questions about trailing. Okay. So this question: do you move your stop to the entry point after you hit the first profit? Okay. I'm different every time. I'm never the same. By the way, if you took this trade, my stop is still the same. These trades can be nice, and honestly, I generally only go for between 2 to 4 ticks on this. This is generally a scalp for me. When I do RTM trades, RTM stands for reversion to the mean. It's just something call it. Okay, so price will have a tendency to want to revert to the mean, just exactly like what's happening right now. Okay, so if you shorted that, I like to be a tick under, and when I do these, I only like to go for between 2 and 4 ticks, just a really quick, a quick, as one of my traders says, a quick Scooby snack. In and out, done. Okay, I'm waiting for the next trade. Okay, so do I move my stop to entry after the first profit's hit? I'm different every time. I don't have any magical, well, if this happens, then I do, and if this happens, then I don't. It's kind of depends on my mood. So this one was pre-open. If I do any trades pre-open, I'm a fan of closing out at that first level. Yes, you can get them, they can run. This thing might run to the floor today, and I, obviously would have got this and this, but like I said in the beginning, not trying to be a hero, just, the objective is to make money. Okay, so back to your question. When I'm trailing, and what I'll do tomorrow, I can't do that today because in the interest of time, I want to make sure I get your questions covered. We cover the simplicity of it. We cover some live trades. What I'll do tomorrow is during our break between sessions is I'll record some live trades with the trading dome in view, so you can actually see exactly what I'm doing. I don't think I've done that before. That way you can kind of get a feel for at least what I do in different trades. So I'll record that. I'll record my screen so you can actually see it happening. I think it'd also be good because I know that there's some brand new people to the art of trading, and so it would be good to have you see that. Okay. So there's a handful of comments / questions about the risk-reward ratio. So yeah, there's no hiding it. There's no okay. So let's look at this. So this trade here, so here's a live box trade. Okay, let's walk through this real time. Okay, so I'm not quick to the draw. So I would be already in this. Okay, I hear the sound, boom, I see the arrow. So the arrow is a visual cue. And so I may not be filled yet. And so what I would be looking to do is either getting out pretty quick here on my first set, depending on where I got filled. I mean, I need at least a couple ticks. Or I would wait until this. So that was pretty quick. If you saw that, there wasn't a lot of time to react to that. Obviously, so let me bring this up because this question always comes up. So we have two different types of trades here. Obviously, forget about the fact that this was pre-open. Okay, this trade here, let me get rid of if you would prefer for me to have my crosshairs up, let me know and I'll put those up, but they seem to be kind of in the way. Am I lagging? I might be. Okay. Am I delayed? Why am I delayed? That doesn't make any sense. You know what? I am delayed. Let me reload my historical data. That's frustrating. I just set this up last night because I wanted to make sure that I set up a new data feed so I didn't have any issues. The problem I had was GoToWebinar. It's very CPU intensive, and that might be the issue. Yeah, I think you're right. I'm a couple minutes behind. That doesn't make any sense though. So let me get to questions, and hopefully this can load and give us real-time data. That's disappointing. Well, if there's ever a trade, that has a higher risk reward than you're willing to take, don't take it. But number two goes back to what I had talked about earlier. The win ratio long term and the overall profitability of these types of trades. Once again, if I know that out of any given set of 10 trades that I take, I'm going to win 7 out of 10 of them, then for me, I don't care. It's worth the risk to take those trades because I know, yes, some will be small, but what I also know is that I'm going to get some runners here and there, and I'll take my initial profit off here, and then I'll get here, and then the last one I'll try to trail as much as I can. And so I know that there are going to be some trades that I'm going to get 3, 4, 5, 6, and in some instances more on those last set of contracts. And so it should offset that. So it just depends on those factors. First of all, you have to decide. Again, what I mentioned in the beginning, what we'll say over and over again, What the box does is reveal a high probability trading opportunity. Whether we choose to take it or not is up to us. So yes, there is some discretion here, but at the same time, it's very simple. It's very straightforward. So we just had that. I missed that. We just had another. Is that real time now? It's still loading. See, something's going on. I apologize, guys. Maybe what I should do is just shut this down and restart it. So that's just the bottom line to it. Yes, in most of these trades, the risk reward, it's going to be offset to favor the side of loss. And so we just have to decide, is that a trade we want to get into? Okay, and then number two, it's very important to look at statistics. So, my experience with this high frequency trading, I used to be partners with some guys, and so they would do, and we're talking huge dollars here. So we're talking like out of a course of a given period of time that they would run statistics. You'd be looking at sometimes even in the course of a month, you'd be looking at in losing trades would be over $1 million in losing trades. The winning trades some months were well over 2 and sometimes 3 million. And so which is kind of the objective of HFT programs. They're in and out, in and out, in and out, in and out, but they take some pretty major hits, and so the drawdowns on the surface look to be. So anyway, my point is it's very important to look at those statistics. That's why it's important to take a sample size. So a really easy way to do that: go back and look over the course of 30 days, and you can see the win ratio. And if it's favorable, then we come full circle back to trading in probabilities, which means that we realize that every situation is unique. It's different than the last, and if the odds are in our favor, then we take the trade. And if you don't like it, then obviously you don't take it. All right, nice job. So last short trade, 6 contracts, snagged a quick $150. Nice job. Okay, so there's been a couple questions, requests to give an example of how to properly scale out. In other words, money management. So myself and my partner, we're very much the same in that regards, and we're very front loaded on the initial exit. So just for simple numbers, if I'm trading 10 contracts, I'm pulling out generally between 5 and, well, I say front loaded. Sometimes I will take out half, but in most cases I'll take out 7 at that initial target, and that might seem a little bit on the crazy side, but it tends to work really well, because then I'll take out 2 at the next level and I'll let 1 run. And it might not sound like a lot, but you do that a couple times a day, and it's not difficult to make $1,000 a day. You don't even have to trade, not even 10. I mean, if you're at 3, if I was trading 3, I would do 2 and 1. I would take out 2 and then let the last contract try to run. And if it doesn't run, then it doesn't run. It's just, it is what it is. And then I'll trail it, Okay. So yeah, that's just it. It's, very straightforward, very simple. If I'm trading multiple contracts, I'm front loaded at the first target. Why? Because we have this, saying that, take your money and run. I mean, get in, get out, and, be done. There's no sense in, trying to, hold on to something and, hoping it goes for 10 points when it, only goes for 2. We're just, trying to scalp out some profits and be done. Okay, so let me go to the next question. So where we got left off when the question about, how do I trail my stops? I'm going to try to record a video to show you exactly how I do that. And what I'll do is I'll use NinjaTrader's chart trader to do that, so that you can see it with the software. So I use different software mostly. I'll use NinjaTrader for my signals, and I'll use some different software generally to execute my trades, but I will use the ATM as well. Okay, so I'll show you, but the gist of it is this. So if I'm in a trade, this, bad example because we're just sideways right now, but I'm different almost every time. If the market's running, some of these trades, let's see if we can see one here. Okay, this is kind of a good example of what I'm talking about. It looks like we just hit a box. So real quick, if the market's running like it kind of did here, then I'm more inclined to be a little bit more lax on being so quick to secure profits. But if we're a little bit more sideways, then I'm going to be a little bit more cautious of that. So, like I said, I'll record a video. I'll try to do it tomorrow, and maybe I'll still do it today. And I'll show you exactly how I do that, so you can see my dome working, and exactly how I'm moving my stops around. But basically, let's just go to this one since it happened. By the way, we've got a box now. Let's see, am I real time yet? Nope. Looks like I'm still 2 minutes lagging. Why is that? It's very frustrating. So, like in this example, I mean, obviously this is after the fact, but hopefully you'll get the gist of it. So if I'm long, I'm out here. And then I generally try to take profits here, and then I'll let my last one, or if I have more, I'll let them run. What I do with that is I put the profit target one tick below the purple line. Why? Because sometimes it goes there. And so what I'll do, though, is every level that it hits, I'll move it up. So by this time, I've moved my stop loss just below the blue line, just to see if it needs some breathing room. And then as it goes here, then I generally will pull it well above this, because the span between this green line and the yellow line, I don't want to give too much of that back. If it does this, comes back, stops me out, fine. But, and then maybe it runs up, I'm okay with that. But, there's quite a bit of profit to be had in here that I'm not willing to give back. And so as we get closer and closer and closer, I generally get tighter and tighter and tighter. And there's no magical formula. There's no magical number, meaning 1.5, etc. Okay, nice job. So yeah, so there's a comment here about taking a previous trade and grabbing a tick. And, this is kind of what I'm talking about. I mean, money is money. Some trades you'll take a tick. Some trades you'll take 10 points, and then you're going to lose a trade or two here and there. I mean, it just happens. When we come full circle back to, statistics and probability. If I know that in a sample size trade, on any given 10 trades, I'm going to lose 7 of, or I'm going to win 7 of them, and maybe win 8. You guys have seen plenty of days. If you've gone back in history, there were no losers. I mean, it was almost impossible to lose a trade. Sure, maybe late fills, late entries, but, the market runs, and there are days like that, and it happens, very frequently where, it's just, one win after another after another. So every trade, for me is different, and I'll do that too. I'll get into a trade, I pulled a tick out of it. It's just what happened. I got in late, like this one here. I don't know what would have happened. I was blabbing too much, and so I didn't take it. But, this trade, maybe that may have been a 1 ticker for me, or a 2 ticker, and that was it. And then maybe I would have got stopped out of my remaining contracts. That does happen to me. So I took 2 ticks on 7, and I took the full loss on 3. And that very well could have, and what would have most likely happened had I taken that trade. It just is what it is. Yeah. So there's a comment here. There's a couple of you guys who trade size. So for those of you that, if you're new to trading, size just means a lot of money. And so you're not going to be, in this person's comment, you're not going to be apt to the strategy I'm talking about trailing. You're going in there for some quick, 2, 3, 4 ticks, and you're out. 50 contracts or more, generally you're not going to, try to get the 5-point runs and the 4-point runs. And so this can do that. It can, it has the potential to do that as far as, dishing out those quick high win ratio profits. And you're probably experiencing that. I don't know, where you're at in this whole process, but yeah. So that again, that the same person. So the blue line is the first and only target. So boom, boom, take profits, done. Next trade. In, take profits, done. Next trade. We didn't get a signal here. At least in my delayed time, I'm still waiting for a signal. So in that instance, someone trading size, it's going to be more of a, a very quick scalp. So we have there's one of the traders that uses this is a private fund manager, and he does discretionary trades with the box. He's very, very good. I'll tell you exactly what he does. He takes RTM trades, almost all of them. For 2 ticks, he trades a lot of money, and he'll take all the box trades. And same thing with this other comment was just for a couple ticks, and he wins over 90% of his trades. He was one of our original beta users. He's got 2 trading offices in Asia, and he loves it. And that's all he does. He doesn't do. I mean, he does other types of trading, but with the box, he doesn't do anything different. He goes in for a couple ticks on, the signals, and then he'll get here for a couple ticks. That's it. Done. And he does extremely well. His RTM trades are over 90% based on his feedback, and he's very, very good. Okay. Oh, okay. I'm glad you brought this up. So Ross is mentioning your charts are different. Okay, so here's the deal, you guys. This more happens with tick charts than other charts, but it is possible that I could have a box that you don't, and you could have a box that I don't. The reason for that is in the data feed, and in the way that it displays data from its source. So, for example, myself and my partner, there are some times where he will have a box that will have the same chart up, same exact settings, everything is identical, and sometimes he'll get a box I don't, and I'll get a box he doesn't, and it just is what it is. Okay, it looks like we're getting a trade here. That's possible. It doesn't happen very often, but it can happen. So the reason for, and there's nothing you can do to fix it. It's just the way that the data is reported, because what's happening is it's picking up specific criteria. There's several dozen factors. Okay, so I know I'm lagging here, but I'd be in this trade right now. I can't see if it worked out yet or not because I'm a couple minutes behind, but I'd be in that trade, if I was trading this. Okay, we just nailed an RTM. Now, obviously talking after the fact, so our little fund manager just nailed that, just won that first target. Am I still behind? Let's see. 30. That was a fast trade. 34. No, am I real time? Hey, I might be real time. I don't know if I'm real time or not. Anyways, so it's possible. Don't worry about it. There's not much, we tried all kinds of things to quote unquote fix it. There's nothing you can do to fix it because it's in the data feed. It's how it reports. Because what the box is doing is it's looking at several dozen factors of criteria and attempting to populate this in real time. So it attempts to skip past, certain lagging aspects of market analytics. And so, which is why it gives us, which is also, somebody asked a question, the size of the box. So basically what happens is between this price and this price is where the specific activity that it looked for was happening. And so that is what determines the size of the box. Okay, so this one obviously is smaller than this. So the activity that the box looks for, it happened in this range. This one here, much bigger range. Okay, this one, kind of closer to that one. So that is why you have different box sizes, is because what it will do is it will find a range, and within that range, it'll look for specific parameters. And once those parameters are met, that's when a box populates, and that's why you have the size of the box that you have. Okay, there's a new box. Okay, I'm I'm way behind in some of these questions. Okay, so yeah, I know this was a question several minutes ago, but I'll record at least one video using the Ninja Traders ATM. And I'll show you how that works, because I know that there's some new people, and it would be also helpful for you. So whether you're very experienced and you've been doing this for a lot of years, or whether you're brand new, what I'll do is I'll make it so that it applies to both. Okay, so there's a question that was asked, what is an RTM trade? So an RTM trade is just a reversion. It's just random. It's just what I called it. It just stands for reversion to the mean. So one of the most important things that you need to always remember about the box is that price will want to revert back to the midpoint. At some point, it will attempt to do that. So if we get a short signal, at some point, let me scrunch this down. It might be the blue line that reacts to it. It might get to the green line. It might get to the yellow line. It might get all the way down to the purple line, which is the last line. But at some point, it's going to want to work its way back to the midpoint. Why? Because it does. And you can see that on every single one of these trades we've had today. We've had a short, and boom, it reverted back to the mean, as I call it, the midpoint. So this is why that fund manager trader I told you about likes these trades a lot, because they're very quick, and so it also minimizes, your losses, or your risk reward ratio is lessened, because stop loss is the same when I do it and how he does it. It's still a tick above on shorts. So what he'll do, short signal, boom, he puts an order in already. He's already got a limit order waiting for 2 ticks. Boom, went back to the midpoint. Long trade, boom, we went back to the midpoint. So that would have won. This would have won. Okay, short trade, and this was quick, which is why he does it that way. And I tend to do the same thing. Boom, in, winner. Whether you traded this short and got out here, or whether you traded the RTM and got out wherever 2 ticks, or maybe you're a little bit more aggressive and you go to the line. Either way, it's a winner. This one went again. I don't take the second time around. It's first strike. For me, the way that I do it, obviously you would have won this one had you done it that way. But I only do the first one. So Heinz, are you the same way? So there's a comment here mentioning that I always trade RTM trades. What has been your experience? So tell me about that. So do you you only take the first one, or do you take it again? And what do you generally do? Do you just go for a couple ticks, or are you a little bit more aggressive and try to get more?
Connection lost.
Yeah, see, I'm just having problems with Ninja Trader today. It's been better than the signals. Okay. So there you have it. Here's someone that's doing it right now, and he's been actually, so he does the first one, so it would have been this one, would have been this one, would have been this one. So you're 3 for 3 today. Well, no, 4 for 4. So 1, 2, 3. Well, yeah, 3. 1, 2, 3. Yeah. So 3 for 3 today. Boom. And so what are you trying to grab? So everyone else can understand how you do this. Do you place a limit order once you get the sell signal or buy signal on the line, a tick under the line, over the line, and are you going for a couple ticks, or what are you doing on that? Okay, so he does market orders and tick charts only. So there you have it. So there's someone that's doing it and doing exactly. So I would assume do you know statistically what your win ratio is? I would imagine it's pretty high. Okay, so he does not use the buy on ask and sell on bid. So I would presume, so somebody's asking a question what your stop would be. So if you, for example, were short here, the way that I do it is my stop is one tick above, because for me the parameters are the same. The odds are still in my favor, and so that's what I do. Do you do the same thing, Heinz? Okay, so you take the midline as a stop, but what am I trying to ask? Do you use a stop loss? Do you put a protective stop in? Okay, so there you go. Okay, so there's your answer. There's a couple questions about that. Where do you place the stop? So if you're short here, stop is still a tick above, and really, really super easy. So I've got GC going. Okay. Okay, box on ES. Okay. All right. So yeah, it's that black and white. So I really apologize, guys. I'm going to use my other data feed for Thursday. I have a better one with IQ feed. Well, I haven't had any issues with it. I've had that for a good decade, and it hasn't given me problems. But I will switch to that for next session. So let's just recap real quick. So when a box forms, it basically what it tells us is to get ready. It's time to go to work. My opinion is that trading should be viewed as like a job that you take serious. When we deal with real money, it's we've got real money on the line, and so we can't make mistakes. And fortunately, this can really help avoid a lot of potential mistakes. Yeah, so I'll just cover this question right now. So basically, somebody can answer this if you know. So the question is there a way to backtest this system other than manually going back and viewing trades? And if somebody knows of a way to do that, go ahead and type that in. My understanding is that the only way to do that is to have the open source, and obviously we're not willing to give that out. As simple as this is actually a multi-million-dollar indicator, and we're just obviously not willing to give the open source to it. But market replay. So there's been a couple comments that have come in, Ted, that some other traders use the simulator, the market replay. That's how they do it. Yeah, so back to the RTM strategy. So if the so this is the way that I do it, and Heinz, if you do it differently, let me know. So if and when I trade the RTM strategy, if this signals short, which it is, then I'm going to place, the way that I do it is I place a limit order. I do both. It depends on my mood. I've done both. I've done a tick under. I've also done on the line. And in both scenarios, there's been times where it got to my limit and it didn't fill it. So, you have that risk. And that's it. So I do this a lot. Like if I've missed this, if I'm late to the punch or I just don't like it, it's too far down here, then oftentimes I will put in a limit order there. And like I say, when I do this, I'm only going for 2 ticks. I'm not trying to be a hero on that trade. I'm in. So in my real time, which is delayed time, I'd have an order down here,
Connection lost.
either at 36.75 or 37, waiting to go, a buy order. And I just lost connection again. I think what might be the case is this GoToMeeting's bogging down my system and it's interfering. I think that might be the deal. So Heinz, if you do it differently, let me know so I can relate to these guys. But that's all I do. You know, our guy in Asia that does it, he does the same thing. And that's it. It's, you know, it's really easy. So, you know, buy signal, I'm going to have an order down here, you know, right there at 36, buy, and boom, fill. They're usually pretty quick. If it's gonna hit it, it's usually gonna, you know, hit it and run. Same thing with this one here. So either 36.75 or 37 would be the entry. Yeah, I'm not even connected to my, I don't even know how it's even going. Yeah. But that's it. So again, the simplicity, we get a box. It tells us to get ready. It's time to go to work. And so we as traders, we look for opportunities. And so as you know, as we've seen this morning, yeah, we've kind of had a sideways market, but there's been, you know, scalpable opportunities here to, you know, to make money. We haven't had a, you know, 5-10 point run today, but we've had some pretty decent trades. All of the RTM trades worked. You know, the box trades that we've had, they've been small, but they've worked. And so let me say this, if we have a, you know, you have to be flexible as a trader, in my opinion. And so if we have a day like today where, you know, it's just not running, I'm not going to try to trail. I'm not going to try to, you know, scale out of my positions. You know, initially, maybe in the first couple of trades I will, because I don't know that it's not going to run. But my next trades, you know, I'm gonna just get out. I'll take everything out at the first target, and then just, you know, wait till volume picks up or wait till we have more fluid movement. Okay. So by the way, if you've been trading, let me know, you know, your stats. So here's long 5 contracts, 1637.5 on the first. That's where you got fill, which is awesome because it's below the box. Target blue 1639 reach trailing now in plus, so now he's up $320 already on this trade. Okay, nice. So another trader is trading this live, is currently down $150, and you know, follow the parameters, and you know, had some late entries, but you know, that's after you trade this for a while, which is really nice, is that, you know, if let's say I'm down, it's very easy to get back in the green. Very easy. So there's a question about let's see. First day on Sim was down $3,000, then fought back and finished up 730. That's pretty funny. But you know, I laugh about that. But it's exactly my point, though. It's very easy to get back in the green. You know, I was yesterday. I have a lot of different things that I run, and I was running a strategy. And one of the trades, it was down over $900 in one trade on 5 contracts, and the next trade was up $2,300, and it closed it out at like $2,150 and some change, whatever it was. And so that's just kind of what you have to realize. You know, when you're thinking in probabilities, you're not thinking about the losing trade. What you're looking at is you're looking at your sample size. You're looking at your 10 trades, for example. And I just use that as an example. You know, maybe you win 8 out of 10 trades. Maybe you're 6 out of 10. If you're 6 out of 10, you need to fix some things, because my opinion, and I don't say this as a claim, but you really shouldn't be less than 70% on these trades. You should, and if you are, then let me know so we can figure out what you're doing to fix it. You should never fall below that. It should be, you know, you should set kind of, you know, a marker. You should not ever fall below 70%. If you are, let me know and I'll help you fix it. Okay. All right. Anybody else been trading? Anybody in this long still? I'm lagging, so I don't know what's happening in real time. Anyways, but it is what it is. The box, once again, I'll come back to the comment I was making earlier. It tells us to get ready. We've got the activity that we look for that gives us probability, and as traders, we want probability on our side. In other words, we want the odds in our favor. And so what the box does is it tells us to get ready. The arrows tell us that, hey, right now in real time, the highest probable direction is down. This doesn't mean, as in the video I recorded last night, this doesn't mean sell. It's not saying, okay, sell market. We still have to decide that as a trader because, hey, if it's too close, you don't like those trades, we're not going to take it. So it's not that. What it tells us is that right now at this moment, the market, the highest probable direction is down. So then we just decide, okay, then, if we're going to take the trade or not. Now, there's another trader that I know, and what they do is they place their order one tick below the box, no matter what. So obviously this trade, they would have been filled here, and they do one tick above, so they would have won more than if you would have sold at market. Okay, they do that, and they miss out on plenty of trades, but they also get better fills on trades that do this. Now, this one, they probably would have lost that trade because they would have been a tick above, and it would not have filled them there. So, I don't know that I'm very much of a fan of doing something like that, especially after it's hit first profit. And I think actually that's their rule. So I don't want to, confuse you, but and I bring it up because there was a comment about that. What this person does is what they will do is if we get in this case, well, let's look at this one. If we get, in this case, we had a red arrow. If we get a sell signal, then what they will do, and if we have not yet reached the first profit level, what they will do is place a sell order one tick below the box. Okay, usually a limit as long as price is below it. Okay, sell stop if price is above it. And then they pull out one tick above. That's all they do. They don't do anything else. So this one they would have not got in here because it reached the first target. So they would have missed out on that trade. This one, they would have done the same thing. Boom, probably a sell stop because this one was pretty quick. So that, price is above, it hit the RTM trade. A sell stop one tick below, okay, because it did not reach the first target yet. Sell stop, boom, filled, okay, that's another winning trade. So won this one, same thing here. Blue, we get a blue arrow, okay, this means the highest probable direction is up. It had not hit the first target yet, okay, in, one tick above, boom, boom, filled here. So 3 for 3 for that person. So that's another thing you can think about doing. If you don't like this, well, I don't want to have to get in that market and it's just too fast for me, then you could do something like that. And that person I know, they do really well. They do really well with that. So once again, let me review that because I know there's some new people here. What they do, if they get it, in this case, a red arrow down, and if price has not made it to the first target, they will put in an order one tick below the box. And they'll pull out one tick above the box. Okay? This one did not meet that criteria because we had the blue arrow and it made it prior to coming back. So this is a no trade. This one did make it. We get a red arrow, red bar, comes back up, nails our midpoint. A sell stop is filled and profits filled. So 2 for 2. This one, same thing. Blue arrow goes up, buy stop, one tick above, fills on this candle because it hits there, one tick past. Okay, won that trade. So that's another thing that you might want to consider if you don't like the enter in at market idea. There's going to be trades that you'll miss out on, but the person that I know that does this, they have a very high win ratio. It's been about a month since I talked to them, but it was like hovering between 83 to 87% wins over losses, which is pretty good. So those of you that are new, I would highly suggest simulating this. I know some of you are professional traders and you do what you want, but anytime you start something new, it's good to practice before you put real money at it. Although today's still a pretty decent day. Okay, so we're at the end of our hour. I wanted to make sure that we filled an hour and you guys got back to your days. So if you have any last minute questions, and I'll cover those real quick. And like I said, either today or tomorrow, I'll record a video showing you some different things that you can do with the ATM with the NinjaTrader, the chart trader. And it's really, really, really easy and really easy to manipulate. And if you like it, use it. If you don't like it, don't use it. But yeah, so we're just going to do a webinar today and tomorrow, or today and Thursday. So basically, the design of this is to give you, talk about the trades. So the rest of today, or whatever your time allows for, practice what we've talked about, and then tomorrow you've got tomorrow to practice, and then Thursday we'll meet again, and so we'll go over whatever has come up between today and Thursday. A lot of the emails that have come in is have been very positive as far as the speed at which people are really getting this. Fortunately, there's not a whole lot to this. It's very black and white. We get a box. Blue means the highest probability is up. Red means the highest probability is down. And I've explained the way that we do it. So the way that we do it, we get in generally at market, and we pull profits initially at the blue line. So had I been able to do this, just as I described all morning, we would be out. So if I was in this, which I'm not, hopefully I can make some, live trades on Thursday. I obviously had some problems with my connection, so I, couldn't do that. But yeah, would have pulled out a tick under, would have pulled out a tick under this one, and then I might have one more in. So right now, if I'm still in this, my stop loss is a tick under the blue line. It's exactly how I would have it. Okay. Oh, are they live? Geez, it's about time my software caught up. Okay, so this is live. Okay, so if I'm in this, so would have been filled here, one tick under the green line, and now my stop loss, I've got one tick under the blue line. Okay, and so I'm just, it's obviously profit now, so I'll let this thing ride. And so I've got my last profit target. What I would do is I would actually move it to probably 47.75. So my last profit target, 47.75, and my stop loss is now at 38.75. If I was doing this, that's where I would put that. So Ted was asking about the pricing. So the pricing is on that website. All of you should have it. pptbox.predictionpointtrading.com. It's leased. We're still in kind of a pre-launch phase. I've been building a new site for the last 6 months. It's taken me forever. That's going to contain some pretty cool things for subscribers on it, as far as the membership side of things. And it's just a huge, huge, huge project. And we've got some other products that we'll be releasing as well that are, really big money makers. But we won't talk about those right now. But if you just go to that site, you can see the pricing there. And then I'll have an additional offer for you guys on Friday. I won't tell you about it yet. I want you guys to get some real world experience with this, so that you can see the value of it. And on Friday, look for an email from me, and I'll have, for those of you that choose to subscribe to the box, I'll have a pretty nice offer for you, for those that do. So we'll go ahead and wrap this up. And if you have questions, Heinz, can you let me know what I have so many different products. We have a hedge fund. Well, we have a couple hedge fund products. We have some, long term. They're just strategies that we've run that we've, like the box it's a strategy. You know, prior to this indicator, we didn't have a box. It was a strategy that was used. It requires a lot of market analytics to do it manually. I mean, it's really quite cumbersome. And so, and I really got to give the credit to my partner, but figured out a way to put it into an indicator, which is really, really nice because you don't have to sit and analyze the market. So, okay. So real quick, guys, in real time, if I was trailing this, so what I would do, I would wait until price got to about 42, 42 and a half before I move my stop loss. And what I would do, if we get to 42, 42 and a half, I would move my stop loss to 40 and a quarter. So that's what I would do in real time. So at this point, I'm going to be a little bit more aggressive at securing profits. I wanted to mention that in real time so that you had some real time feedback. Okay, so let's see. Ross, it doesn't generally happen too much. So and maybe I'm not understanding your question, but the question is, what happens when you get a short box signal, short box signal and an arrow, and then a long box signal and an arrow? So are you talking about this? So here we have a short and then a long, or are you talking about a different setup? If you're talking about this, here's what is very, very, very important that you always remember. Okay, NQ, are you on a 200 tick chart on the NQ? Okay, so his question is this. I think you're looking at this. So, okay, so anytime so what happens is when price closes above or below the box, we'll get an arrow. So if we, obviously we were short, okay, nailed our first prop target. We had we had an RTM trade here, and it kind of held as resistance through here. And then price finally broke through long. So now we're long. So you either pulled out everything here or you let some run. So let's say that I was going to try to trail this. Okay. So I took off a majority of my contracts here. I'm going to lose on my remaining contracts here, but I'm long. And so I'm going to make all that money back by here. And then now I'm trailing it. I won that. And now I'm up more, right? I'm trailing my stop. My stop is down here. So in real time, so what I would do if I was in this, I would wait, let's see, 86, 88. I'd wait till we were about 88 and a half to 89, and then I would put my stop loss at 80, 85.5, which is kind of a big span. It's just what I would do. I would want to give this some breathing room, because if we're going to run, I want to take advantage of it. And so I want to give it some breathing room. But I also don't want to be stopped out. And at the same time, I want to protect a majority of what I've worked to earn. So this is the NASDAQ. If you trade the NASDAQ, I'd mentioned we're just going to talk about the ES, but we're at the end of our session, and since I've got it up, so market open 7:30. This is what I prefer. The 200 tick chart on the NQ. It works really well. You're gonna have some pretty high win ratios. Obviously winner. This one smaller winner, but winner nonetheless. It gave you a nice RTM trade. So you can see here we came up. We tried to make it back to the midpoint. Didn't make it, which is fine. But you can see the behavior of the box. Long, we tag our first profit here. RTM trade, boom, you win that one. You win your second. If you scale out, you win that one, and you're still trailing this. If we slow down, by the way, in real time, if we end up slowing down, I'm generally more inclined to go midpoint between these two lines. So if we just kind of hover, it's an indication of one or two things. Either the market's getting ready to blast upwards, or it's done. So what I would probably do, I'd probably wait another couple bars, but I'd probably bring my stop to about 84.75. and then I'd still bring it one tick under if we get to 88.59. That's just what I would do. So a couple more ticks, and then I'm moving my stop to 85.5. And then as it starts, if it slowly creeps up here, I'm going to bring it as it's moving. I don't want to give too much back, or I wouldn't want to. I'm not in this, but that's what I would do. And, since this is a real-time trade, that's what I would do in this scenario. But so Heinz, on your question about the market viewer, if you could just send me an email, and if there's a link or something that you can explain, I'm honestly not, or if you're talking about the map, if that's what you mean. Somebody did ask a question about the map. Yes, that's available. Yeah, and I can. Okay, so let's see here. Yeah, so the map it's available. It's a very useful tool. Okay, so in real time, I would have been here. So let's just walk through this trade. So I'd have my stop now at 85.5, but I'm very cautious now. So we hit 89.5, and our line is at 95. Okay, so at this point, let's see, 89.5. Okay, so right now I'd be probably 86.5 or 87. I'm going to trail this pretty close now, and we've had a pretty good run. And from your potential entry, you've got you're up 8 points right now on your last. If you're trailing this, your last set of contracts. I don't want to give too much of that back at this point. Sure, it might go another 8 points, but like I said from the beginning, we're not trying to be a hero. We're just trying to make money. And so it's just what I do. If you have a better way of doing it, then do that. But I just wanted to show you that. Let's see. Let's go back to okay. So our ES trade. Okay. So at this point, same thing here. We've got we hit a high of 42 and a quarter. Or so 30, so we've got 4+ points of movement. I don't know. I might be pulling out at this point and call it a day. It's a pretty good day, or it should have been a pretty good day for you guys. So we'll wrap this up. One last question, and then we'll wrap this up. Who in here traded this trade? Who got long here? Okay, Heinz did. Helio. Okay, nice job. Nice job, Michael. So quite a few of you did. Yeah, so that's a good point. So this is kind of what, so there's a comment about, kind of getting quote unquote killed in some of this here. So it comes back to what I mentioned earlier at the beginning of this session. You just have to always, so this is the way that I do it. If you have a better way of doing it, then do it. But these sessions are to explain to you what I do, what we do, the way that we manage our trades, the way that we trade this. Okay, so you're still long 5 contracts from a fill price of 38. Nice job. Okay, so back to the concept of probability. So as a trader, this is my opinion. If you like it, adapt it. If you don't, then do whatever you want to do. But this has worked very well for me and people that I've worked with in the past that have adapted to this. It works well for them. And it's simple. It's a simple concept. And all it is just trading in probabilities. And what that means is that we have an understanding that every situation is unique. This situation here is totally different than this one. You could say, well, look, we got a box here, and this was a blue arrow, and we got a box here, and this was a blue arrow, so they must be the same. Well, no, it's not the same. It's completely different. The conditions that existed in the market at this time, there's a comment here, PPT tool is stressless if I follow the rules. So I'm glad you made that comment because it reiterates that. So here's someone who's trading this now and killing it today and doing nothing different than what I'm talking about. And if you are, let me know, but I don't think you are. So the point is this, and I'll wrap it up. Here are two what would seem like identical trades. We have a box here, blue arrow up. We have a box here, blue arrow up. Well, hey, this one, it was small, and then, anything that I left in, I would have lost. So I'm not going to trade this one. No. No. This is a completely different set of conditions. The box detected the same type of conditions, meaning a specific type of activity, but it's totally different. It's a totally different opportunity. And so back to the concept of the sample size. If I know, and this is why, for a majority of you, I'd really like you to simulate this and practice this so that you can see that what I'm telling you is it's real. If you know that out of any given 10 trades that you take, and you know that you're going to win 70% of them or 75% of them or whatever, whatever your numbers are, let's just, whatever the amount of trades, take 20 trades. In fact, here, I'm going to give you an assignment. What I'm going to have you guys do is take 20 trades. So whether that be, on the signal or whether that be the RTM type trades, take 20 and make sure you specify, write it down. It shouldn't take you long. You should have at least 20 trades by the time this week is over. Take 20 trades and look at your stats. It's very simple. It won't take you long. It just quick down, boom. Okay, I got in. So like Heinz. So he's in this long. Okay, boom. I'm on a pad of paper. Okay, filled long, 1638. Okay, and then just really quick. Okay, I pulled 10 contracts out here. I pulled 5 more out here. I've got 5 left. Or, whatever your numbers are. And I'm letting those run. Write it down. So, okay, that obviously is a winner. And then you can simplify it. You can go back after you got your 20 trades down, you can simplify it. Okay, it's into, okay, winner, loser, winner, 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 loser, winner, 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 loser, loser, winner, winner, winner. Okay, so at the end, you're going to have a number. You are going to have, a raw number to work with. So you'll get better, you'll get the hang of this better, but it should only take a couple days to get it. It's not difficult. And so then you'll know your statistics. So I know that, okay, on the ES, I'm about my personal statistics. I fluctuate between 83 to 87% on any given week. Okay, so I know that out of every, I'm just going to round it up to 100 so the numbers are easier to visualize. Out of every 100 trades I take, I'm going to win between 83 to 87 of them. And so I'm going to have, between 13 and 17 losses out of every 100. Okay? That's it. And so what I do is I play the odds. Now you'll notice I didn't say, yeah, but, well, this trade, Bernanke said this, and it caused the market to do this. Or, yeah, but, well, this trade, it was XYZ. No. The box is the box. It's as simple as it is. It forms. It tells us an opportunity is present. And the way that we trade it is exactly how I've explained. We wait for an arrow. We get in the market. We take profits when the market gives it to us, which I've been training people for a lot of years. And one of the things that I see as being one of the drawbacks or downfalls to traders is they don't take profits when the market gives it to them. I've seen traders be up $5,000 in a day only to be down $5,000 in a day. Literally, I've seen that. They don't take profits and they hold on to trades. One of the things that I may have mentioned before, one of our traders said, is to never hold on to a trade. So meaning, let's say you're short here and, okay, I really want to trail this. I really want to trail this. I really want to, try to get 10 points out of this. Yeah, here's the long. I'm going to ignore this long. I'm going to hold on to my short. No, absolutely not. Don't do that. When a new box forms, new conditions are present right now. Okay, this is old. This is not applicable anymore. When a new box forms, it's telling you that we have new market conditions that are very worthwhile to pay attention to, and this is why. Okay, these lines, as you see, we've been doing this live real time, and you can see it on your screens, they're very reactive. And so when price reaches any one of these, it would be advantageous to a trader using this to take profits when profits are given. Okay, so again, that's the way that we do it, and it works well for us. It's worked well for others, and like the comment that Heinz made, he said the PPT tool is stressless if I follow the rules, and the rules are simple. So there's the question, yeah, and so he also changed the black. I did the same thing. So he said, I changed also from the colored candlestick to the black OHLC. No stress, observe only the trend. And that's exactly why I did that. When I first put this indicator on my chart, I used to have, I use silver and red, but it's the same thing. I've done candlesticks for years, but, and so the flaw in my mind, I know too much. I know too many patterns. I know too much of this and too much of that, to my disadvantage when it comes to something that's simple, which is exactly why, for me, you might not like this, but for me, I changed it to OHLC bars, colored them all black, because I want to focus on one thing and one thing only. And that one thing is really three things. It's the box, it's the arrow, which also changes the color of the bar, and it's these lines. I don't want to look at anything else. I don't want to look at a doji. I don't want to look at a spinning top or a shooting star. I want to look at this, because this is easy. This is simple. I don't want to be, distracted by anything else. The question is, do you have experience with hybrid Renko bars? Personally, I've never used Renko bars ever. I've put them on my chart. If you like Renko bars, you can put the box on that. And if you do that, I can't remember, but I think one of our other traders that uses the box, I want to say he uses a 2-brick setting, but don't quote me on that. For the ES, you'll just have to kind of play around with it. There's another question. What is the best other market after the ES-TF? NQ, 6E? Well, so then it just comes down to, so we're going to really just focus on the ES this week, but I'm going to answer your question. It's up to you. So obviously we have a trader in here that's trading this. And so this is the NQ. For me, I like a 200 tick. It has very high win ratios. It's been very good to me. I used to trade this a lot. I still trade it, and it works really well. So that's what I like on there. Since you mentioned the 6E, let's see if I have yeah. So let's see. Here is the 6E. So 6E, this is a 500 tick chart. And so we have a few traders that trade this with the box, and this is what they use. They use a 500 tick chart. So, it depends on what hours you trade this. We kind of had a funky trade here. It was a winner. It's very quick. So my time, 640, boom, long. That was a winner. It's still been a short. The RTM worked beautifully on this. It worked there. The RTM worked, remember, didn't hit the first line, so boom, that worked, if you're just scalping. Gold, you can trade gold. Let's see, the GC, I think I have a 100 tick. So I actually don't trade this, but we have quite a few people that do. So let's see, we had a short signal at my time 7:16, and that thing, check out this RTM, nailed it. This thing ran to the floor, and then we got a long signal at 8:11 my time. This is mountain time. So the comment here is gold is very much a go with the market. Yeah, I would agree to that. So boom, we got a nice RTM trade. I mean, all of these are winners. This is a 100 tick chart on GC. This is the August contract. Is that the current contract? I don't know. I don't really trade this. So comment here, just have a BIF stop on gold, but really good. Yeah, I mean, you would not have lost money today on gold. Okay, so yes, this is the correct. So gold, if you want to look at that, this is the GC 813 contract. I have a 100 tick chart on this because I know we have another trader that trades this, and he uses 100 tick, and he loves it. So I don't know. Do you use something different, Heinz, for gold? Or anyone else that trades gold using the box for box trades? I mean, RTM trade, winner. This RTM trade, winner. I mean, all these are winners. You're in that one, that's a winner. I mean, this is huge. Huge, huge, huge. That's a big winner. For the TF, I do trade this. I kind of, TF is, let's see, where is it? Oh, here it is. Let me pull it up here. So the TF, I like a 100 tick chart. So let's look at that real quick. You would have lost this one, won that one, won this one. Probably about even with these three trades. Ooh, this one, that's a loser. You would have won this one, but you have an RTM trade here. So if you trade those, this short, small winner, this long, it's kind of the same thing. We kind of had some sideways crap earlier today. This one was a winner, the RTM trade. I don't know if you got filled or not, but that one went. But anyways, let's see. So that's, anyways, that kind of just gives you an idea. It's very consistent, as you can see. Not always. So this is a good question. So even if it runs 10 points and then goes back to the midpoint, you still take it? No, not usually. Just because, I mean, it can react, but for me, too much has happened. I mean, if something's gone 10 points, and it's very possible that to me, there's too much risk involved. Plus, by the time it gets back there from 10 points, there's a whole new box, usually. Yeah, I mean, it can work. I don't really have statistics on big runs like that and trading the RTM strategy, but I suppose it could work. I don't do it. See, I'd rather because here's you guys know this. I don't need to tell you this. You just know this. When the market's moving, if it's going to go in a direction, it doesn't go straight up or straight down. It goes up and down on its way up, or it goes up and down on its way down. And so that's really kind of what we're taking advantage with this RTM strategy. In other words, if this thing's going to go up or going to go down, it's going to have that fluctuation. And so what we're doing is we're just taking advantage of that fluctuation and, kind of, almost like a sniper, scalp, getting in on that, very precise entry. So the YM, I have traded that before. So this is what I've done on the YM. On the YM, I've used a 10 range chart. Very, very few trades, but it usually gives really good trades. So you had one, and a lot of times they're off hours. Loser here, but, well, no. This is not a loser. Let me talk about this real quick. We're 30 minutes past ending time, but I want to talk about this. So real quick, pay attention, then I promise we'll wrap it up this time. Okay, so check this out. There's one of two things that to consider when this happens. Okay, so check this out. We have a short here. We have a box here. Okay, so our stop is here. Well, we also now we have this box that formed, and we got a blue signal. So the question, of course, is what do you do? What do you trade off of the new box signal, or do you hang on to your position? Okay, well, I've done both. I've won on both, and I've also lost on both. So in other words, what I'm saying is that there are times where I've held on to this and lost, but there's also times where I've held on to this and won. So unfortunately, I don't have a concrete answer to give you. It's just something that you're going to have to decide for yourself. Now, one thing that you can consider is that if you took an RTM trade, well, first of all, you probably would have looked for this one. Now, this one is a guaranteed fill, depending on how you trade that. And so if you're in this short on that, then you could take that into consideration, that, you know what, this is still, the market's still basing its decisions off of this prior box. It's still fluctuating. And so I'm going to hang on to it. Now, what I've done is, in instances like this doesn't happen too often where, you have this. I mean, it does happen, but this is somewhat unique in a way. But you just have to decide really for yourself. It's really the only discretionary aspect of the box is when you have another box like this. Now this one's smaller, so I tend to be a risk taker, and I tend to I definitely don't hold on to losing trades. But if I'm in a trade and it's not, so the way that I look at this is I've already accepted the risk. So for me, generally, it's worth the risk to see if it's gonna, work out or not, or fail, because we're hitting this resistance point here, this midpoint, and I automatically know that should by now be common knowledge that we're gonna have some resistance. Okay, so something to consider. But anyways, so we kind of got off on some tangents there. I hope it helped. If you have any questions, just send them to support@predictionpointtrading.com. I'd be happy to answer your questions. The last word of advice I would give you guys is to do not overcomplicate it. The box, and I'd mentioned this in the recap video, you're going to hear me say it 50 more times this week. It's too simple. Okay, we have a box formed again that tells us an opportunity is forming and to be ready. And the opportunity is great. We know that. Arrow tells us the highest probable direction. So whether you choose to get in that direction or not is up to you. And if you do, then if you did today, you'd be very happy today. Made some nice money. And that's it. These profit levels, you need to seriously consider pulling profits from, because they are highly reactive. Okay, we can see that. I don't need to tell you that. You can see it. Highly reactive, highly reactive, highly reactive, highly reactive. I mean, this is sitting on this line. Okay, and then the RTM strategy. I mean, for the sake of argument, we have a very profitable day today, and I know that some of you have made some good money already while we've been doing this live. So anyways, that's a wrap. I'll let you guys go. Thanks for attending. Be ready for Thursday. I'll try to make it more streamlined. Hopefully I won't have any connection issues. I'll try to fix that between now and then. If you have any questions, send them directly to support@predictionpointtrading.com. Again, thanks for attending. Have a good rest of the day. And if you choose to trade, good luck. Have fun. And if you want to review any trades, then let me know.